Thank you for joining today's webinar. We're going to get started in a moment. We're just checking the audio. So it sounds good. So today's topic is one that comes up on a regular basis. So I would just first of all thank you for joining the session. Please ask questions in the comments. If you're watching this as a recording, please ask questions in the comments on YouTube, and we'll respond within 24 business hours. You can ask questions in the chat if you're watching this now live on the recording. Please like this video as well. We really appreciate that. And please subscribe. We do webinars every single week. So if you subscribe, you'll get notifications and you'll get full access. So let's get started and start going through the slides. So the first slide here has a roadmap of what we're going to be talking about. So we're going to be talking about a solo 401k through equity trust versus a solo 401k with a self-directed solo 401k, like a solo 401k through my solo 401k financial. So as you'll see as we go through these slides, one of the top reasons that we have clients switch over to us comes down to the items listed here. So the flat fee that we offer. So we offer 100% flat fees regardless of account size. So when you have a solo 401k through a custodian solo 401k like Equity Trust, their model is typically going to be where you have to pay your fee depends on the size of your account. Whereas with us, there's no extra fee even if you have a larger size account. You also have direct checkbook control over your money. So we help our customers open up accounts at hundreds of different banks and brokerages, alternative investment platforms like cryptocurrency exchanges. And then lastly, you'll see on this slide, we're highlighting the expert compliance support. So the reason that people sign up with us is because they want to do things like invest in real estate or invest in cryptocurrency, take a 401k participant loan, make a Mega Backdoor Roth contribution. So we have deep knowledge and experience in all of those areas. So we can really help you navigate being able to do that with your solo 401k so you can achieve your objective. So, and our service is impeccable. I mean, our reputation is pristine, as you'll notice if you look at our reviews. So this next slide here is a great slide as it visually compares some of the top features and differences between a solo 401k at Equity Trust versus one with my solo 401k financial. So the first row here talks about how you can open up your account again at hundreds of different banks, brokerages, cryptocurrency exchanges like Bitcoin or Gemini or Kraken, just to name a few, or other types of alternative investment platforms. So if you have a solo 401k at Equity Trust, your money is with Equity Trust. We never have access to any of our customers' money, but we do help you, and we have tremendous experience and service in getting an account set up for your plan. So whether you want to have that at a bank or a brokerage, say like Fidelity or Schwab for traditional investments, or you want to go the alternative investment route, we'll be there and we'll prepare all the paperwork. We'll speak to your banker, for example, to make sure that the account is set up quickly and correctly. And you can even have accounts at different places. For example, we have a lot of customers who might have, say, a bank account, and they've also got a cryptocurrency exchange account. So you can have multiple accounts. As I mentioned, we do prepare all the paperwork. We do that very quickly. So we've got experience at a lot of the different platforms. We've already got their application. We'll get it all pre-filled out specifically for your plan. And so that you can be confident that it's being done quickly and correctly. Again, with Equity Trust, your money's going to be with them. So of course, they're not going to help you open up an account somewhere else. checkbook control. That's another huge difference. And that, if you're looking to invest in alternative investments, checkbook control is a major factor. And that's based on experience, that's based on feedback. So for just to take a simple example, if you want to be able to invest in, say, a private placement or a syndicated transaction, you might have a very limited window that you have an opportunity to make that investment. And so if you don't have checkbook control over your money, you may miss out because you're waiting for the custodian to process your distribution or investment request, and you may end up missing out. Another practical example is people who invest in real estate. Let's say that you own a rental property and you need to pay someone that's coming in to fix up the kitchen. And so if you have to go back to the custodian every time you need to be able to pay somebody, that's going to cause delays. It might cause frustrations with the vendors or the workers who are doing the work. They may not want to work for you because they know they're not going to get paid for a long time, right? So when you have checkbook control over the money, you got that quick access to it, which is key both for investments as well as managing your making the investments initially or managing it going forward. And the reason you have checkbook control, just to really tie it together, it goes back to the fact that you have the money at the bank of your choice. You have the money at the brokerage of your choice. A lot of these brokerage firms, for example, Fidelity, Schwab, TD Ameritrade, just to name a few, where we help hundreds and thousands of our customers open up accounts, those brokerage firms will provide a free checkbook with the account. So you get the ability to invest in the investment options that the brokerage firm has, like your typical mutual fund or equities, as well as being able to invest in alternative investments because the account is governed by our IRS approved plan document, which allows for those alternative investments, as well as having the checkbook. So it's kind of a hybrid approach there. So that's where the checkbook control comes from. We're not giving you a checkbook because we don't have access to your money. It comes from whoever the account provider is. The next row here, we've got Mega Backdoor Roth setup and expert compliance support. So with our plan, which a lot of providers don't offer this, but we do, we've done it for many, many years, and we have tremendous experience and expertise in helping our customers execute a Mega Backdoor Roth transaction, is our plan allows for that, and we provide all the support. And so just to paint the picture a little bit, a Mega Backdoor Roth is a type of contribution where you can contribute, for example, for 2020, up to $57,000, or if you're 50 or older, even $63,500 to the plan, where ultimately the money will be in a Roth sub account. And so if you have, say, two people participating in the plan, let's say it's a husband and wife scenario, and you both have the self-employment income to justify that type of contribution, you could end up with a tremendous amount of money in your Roth account and really supersize that account. You're putting in $50,000, $60,000 a year each. You can see how that quickly grows, and then you have the potential for a tax-free distribution once you make a qualified Roth distribution after you're retired. So that type of contribution, though, does require expert compliance support. For example, the way that you execute it is you have to put part of the money into a separate voluntary after-tax sub account. And we have a lot of resources on our website. We've got webinars on all the mechanics of it. But the short story or the punchline is that you need to have that expert compliance support. For example, you have to have a 1099-R issued and each year that you make that Mega Backdoor Roth contribution. And so we handle that as part of our service for no additional charge. So that's a very popular reason that our clients are attracted to us, because of that feature. The last feature here is one we talked about it. We started to talk about it in the prior screen, and it comes back to the fact that our pricing model is a flat fee approach, regardless of account size. Whereas the custodian pricing model is they will charge based on the size of your account, and it goes up and up as your account value goes up. Whereas with our fee structure, it's totally flat regardless of the size of your account. So we charge $125 per year per plan, even if you've got multiple participants. Let's say, again, back to the husband and wife scenario. So that's another great feature of our plan and the reason that people are attracted to it. So please ask questions as we go through this. We've got plenty of time to answer all your questions. Otherwise, we'll keep going forward. So now let's shift gears and talk about the process. So we do have a fair amount of customers that start out with a plan at Equity Trust and then want to switch over to our self-directed solo 401k. And so this page right here goes over the process. So when you already have an existing solo 401k and you are restating it with our plan, your plan continues. So a 401k is technically a retirement trust. So it's a type of legal entity in the sense that it's the documents that create the trust. And so the trust will continue, but the documents will be replaced. So instead of being governed by Equity Trust's plan documents, your plan would be governed by our IRS approved plan documents going forward. So when we draft the documents, we wanted to relate back to the original effective date of your plan, which is typically January 1 of the year that you set up the plan. So if you set up the plan in 2018, your original effective date might be January 1. So we would list that on the plan document. You can find your original effective date by looking at your adoption agreement. And that's one of the questions we ask you on our online applications, is so we can properly draft the plan. We would obtain a 401k EIN number. Typically, you wouldn't have one. So you do need one. For example, when you go to open up the account at your local bank or the brokerage, that account needs to be opened up under the EIN number for the plan. It's not going to be opened up under your social security number or the EIN number of your business. If you have an EIN number for your business, like an S Corp, there's a separate EIN number that is obtained for the plan. And we obtain that as part of our services. That's the IRS expectation. That's the way that it's always been done. And practically speaking, that's important because when, let's say that interest is being reported because it's an interest-bearing account that you have at the bank, or you have a CD, or let's say that you're invested in a private placement and a K-1 is issued to your plan, it's going to be very important that all of that tax reporting that is done with respect to the 401k investments that you're making, that all of that tax reporting is done under the EIN number for the plan, so that the IRS understands that the income that's being reported is being reported with respect to a 401k, which is a tax deferred entity, as opposed to if you had that account set up under the EIN number, say for your business, like your S corporation, and now the bank is reporting interest with respect to the EIN number for your S corporation, you would very likely not report that in your S corporation tax return because you think that that's interest that's earned on a tax deferred basis inside your 401k. And so that's going to cause problems and confusion because the IRS is going to come looking for that income to be reported with respect to the EIN. But if it's under the EIN of the 401k, they understand that it's being earned on a tax deferred basis. So that would be another key step as part of the restatement process, is obtaining that EIN. Opening up new accounts. So again, one of the popular reasons and main reasons that you might come over is because you want to have an account, say at a cryptocurrency exchange or a bank. So we would prepare the paperwork to open up the account wherever you want it, or accounts. If you're going to do the Mega Backdoor Roth, then you end up with 3 accounts. You've got your pre-tax, your Roth, and your voluntary after-tax. If there's multiple participants, like the husband and wife situation, you might have 6 accounts, pre-tax, Roth, and voluntary after-tax for each of you. So of course, we prepare all the paperwork to get those accounts set up. We handle the transfer process. So with Equity Trust, they have restatement forms, which is their distribution request form. And then we need to provide our letter of acceptance. So we prepare all that so that the transfer is done quickly and correctly. And then finally, we note here that no final form 5500 EZ is required. So, and that goes back to the fact that the plan is being restated. So the plan is not ending. If the plan was ending, you would have to do a final form 5500, because even if the value is less than $250,000, so you haven't been doing a 5500 EZ all along, if you were to close the plan, you have to do a final 5500 EZ. You have to issue a 1099-R to report the rollover. Here, though, the plan is not ending. The money is not being rolled over. So no final form 5500 EZ is required. No 1099-R is required. So please ask questions as we go through this, and otherwise I'll just flip to the next screen. So where we've got additional considerations. So if the assets exceed $250,000, you have to file a form 5500 EZ. That's one of the things that we handle as part of our compliance support. We handle that form 5500 EZ for no additional charge. Sometimes when new customers are restating a plan, though, from an existing plan at a different provider, they may not have been filing that 5500 EZ. So if you haven't been filing it, the good news is the IRS does offer a correction program, so you can really limit the cost and late fees that otherwise would apply. And so it's a very pretty straightforward process. We can certainly give you information about that. But of course, we want to see the plan brought up to speed if you haven't been filing the 5500 EZ and your assets are above $250,000. Do you want to keep your investment? So let's say that you have a specific investment through your existing solo 401k at Equity Trust, and you want to come over to our plan, but you don't want to liquidate that investment. You don't want to sell that investment. So that means that the investment is likely going to be retitled. You need to communicate with the investment provider, so that they're not sending proceeds back to your account at Equity Trust, right? And that, if they don't have the EIN because you never had one up until that point for the 401k, that would need to be provided to them. So of course, that's part of the process that we are helping our customers through as they restate the plan with us. Like we talked about, if there's multiple participants, you got to make sure that there's separate sub-accounts. And if you got different types of funds like pre-tax and Roth, again, additional separate sub-accounts. Finally, if you are doing this at a time when there is a deadline, let's say it's a contribution deadline, right? You may want to file an extension if that's available to you, just to give you plenty of time to complete this process to restate. Obviously, we move very quickly in our process, but you're dealing with different providers and parties out there that are going to move at their own space or their own pace. So thank you for your continued participation. We're going to go forward. Please don't hesitate to ask questions. So the next slide here is we're going over our compliance support. So we've touched on a couple of these items, but they're worth it because they are very important. The first thing to mention, of course, is the Form 5500 EZ. So again, that applies if the value of the plan exceeds $250,000. So that's going to include all the different sub-accounts, all the different assets. So it's not just the cash, right? It's the value of those alternative investments, the cash, etc. If the value exceeds $250,000 as of December 31st, a Form 5500 EZ is due to the IRS by the following July 31st. And we prepare that as part of our services. You just have to let us know because we don't have access to your account, of course. And then we'll put you in the queue and we'll handle that for no additional charge. 1099-R reporting. That's another area of compliance support where we're providing a tremendous amount of support for our client base. So a 1099-R would come up in the context of a distribution. So if you're taking money out of the account, if you're rolling money over, let's say you were to roll money over, say to a Roth IRA. So an in-plan conversion. So if you're converting from a voluntary after-tax to a Roth sub-account as part of a Mega Backdoor Roth contribution, that's going to be a 1099-R reportable event. If you're doing an in-plan conversion from a pre-tax sub-account to a Roth account, that again is going to be a 1099-R reportable event. So we handled that as part of our service for no additional charge. And that's very important. Required plan updates. So we take care of automatically all of the mandatory plan updates and amendments for all of our client base. So of course we would do that for your plan, and there's no additional charge. You've got periodic minor updates, and then there are major updates. So we've got a major update on the horizon. And so that'll be part of the, of course, the plan with us. Contribution calculation. So we do field questions every day from our customers who are looking to determine how much they can contribute, how to report it, you know, the process. For example, if it's Mega Backdoor Roth, and it's got to go into a separate sub account. If it's voluntary after tax or Roth, we have calculators on our website. You know, we would help you run the numbers specifically for you. So we provide a tremendous amount of support when it comes to contributions, loan document preparation. That's another very popular reason that people set up accounts with us, because they want to take a 401k participant loan. That's where you could borrow up to 50% of the balance, not to exceed $50,000. That is not going to be considered a taxable distribution as long as it's properly documented. So you have to document it with a promissory note, amortization table. So we prepare all of those documents within 24 business hours so that you can take that loan right away, and we don't charge anything for those documents. It's included as part of our services. Alternative investments, again, we're fielding questions every day from customers when it comes to the mechanics of how to make alternative investments, whether that's cryptocurrency or real estate or notes, whatever they're looking to do. And then finally, account setup. So we do that, of course, at the beginning of the process, but also if later down the road you want to add a certain account, like you want to add an account at a cryptocurrency exchange like Gemini, or you want to add an account at a brokerage, then we would handle preparing the paperwork for your plan and just helping you get that done. So that's another important area to highlight. So please don't hesitate to ask questions. Again, if you're watching this on a video recording, you can ask questions in the comments and we'll respond within 24 business hours. You can contact us at 1-800-489-7571. You can email us at business@mysolo401k.net. I really appreciate everyone taking the time to join. And we'll see if any questions come in at the end here. Well, thank you, everyone. Again, appreciate the participation and watching. And please like this video. Please subscribe. Take care, everyone. Thank you so much.